Well, good morning again, everybody. This is Matador from freetradingvideos.com. It's June 23rd. It's Tuesday, and you can see what happened yesterday on this 3-minute chart. It's kind of scrunched up, but I wanted to do it for a reason. Sell-off after sell-off, little bits of rallies here and there. Pretty good support here. 89.69 broke. Resistance all the way back down. So now we're still fighting that same area after the market, and then pre-market we're getting a little bit of a spike up. But to put that in context, you can see that the run-up is actually right into this resistance area. So let me zoom in here, and this is what's going on pre-market. So it might look dramatic. Again, just remember to take it in context of what happened yesterday and to look out for these numbers. So part of the little pop here is due to some economic news. We have existing home sales coming out at 10 o'clock. And if you go back to the front page here of Yahoo Finance, investors are cautiously upbeat again after Monday's big sell-off, and stock futures are edging higher early Tuesday ahead of the National Association of Realtors report on May sales of existing homes. They believe that they might rise 2.8%, which would be a sign of the troubled housing market mending. So that's already being priced into the market. So a little lesson here, if you don't already know this, a lot of times news gets priced in very, very quickly, even on the rumor. So what happens now if the news doesn't meet that number of 2.8, right? So in that case, we'd probably see a sell-off. If it beats it, then we might see a run-up. But if it stays close, it's already priced in. So that's what this is about. So you have to be really, really careful about trading into news because unless it beats estimates at this point, it's probably going to see some kind of a sell-off, or at least a consolidation or stagnation. So, and since we're consolidating it down here on its low in a grand scheme of things, that's not much of a pop. So the news to me today, we could get a nice run up, especially again if we beat those numbers or if some other catalyst starts driving the markets. But after a pretty good size sell-off, this was a 200 MA on a daily chart, so nothing to sneeze at, and a rising 50 MA just almost completely disregarded yesterday. Next logical place of support, 88.50. If you look at this chart here, which is a 60-minute, 88.50 is a really good number, and it's right through here. So you can see this support. This is off of a gap. So I don't know if you can see this little ellipse over here as I draw it in. That gap had held as support for a while, and that number is the $88.50 mark. So to my eye, that's the next logical place of support. Then we'll have the round number of 88. So I could drop an 88.50 in here, which is right what I did. This is also a market that closed right on its low, which means that the people who had sold short yesterday weren't even looking to take profits, which is pretty intense. There's no long lower shadow here, even a shadow at all. So that tells me that on this kind of volume, which it's still I'd say average now, but if that had been a spike, that'd be even more dramatic. So again, today we'll be telling, just like yesterday, watch the trends in the VIX. You can see what happened yesterday in the VIX. Let me grab that real quick. Go to intraday. Big run up, and then a sell-off. I would say a pullback. And that means that that was the same kind of consolidation that we were seeing in the S&P, but it didn't quite match. So this sell-off here toward the end of the day was corroborated only by a small run-up or a sell-off in the VIX. So very good. Watch this little up gap this morning. Watch the 10 o'clock news and trade smart. So thanks for your comments also under videos in the chat room. Anywhere you'd like to post them, and your comments are always welcome. So trade well, and I'll talk to you soon.